Hello, and welcome back to Explain the Charts. Today, we're analyzing the SPY, looking at both recent news and chart data to inform our trading decisions on May 30th, 2025. Recent news indicates a tug-of-war between Trump's tariff policies and Nvidia's strong earnings. An appeals court has reinstated Trump's tariffs, creating some market uncertainty, while Nvidia's stock jumped significantly after exceeding earnings expectations. Let's start by looking at the daily chart to assess the overall trend. On the daily chart, we can see the overall trend for much of the past year. We had a large drop in early April 2025, followed by a subsequent rapid recovery. Then we've been in a bullish range. Let's narrow in on the most recent candles from January 2025 onwards. Zooming into the daily chart from January onward, we see that SPY recovered from a drop in early April and now appears to be forming a possible double top formation. The high of that formation is at around $593.06, where the market dropped after failing to break through on May 29, 2025. Look to see if it gets rejected again. If the price breaks below the $586 level, we could see it retesting the April lows. However, if the index manages to break above $593, it may run higher, and it would be a bullish indicator. That seems less likely, as this run has been choppy. The $593 level appears to be a major resistance. Also notice the drop from the end of February into early March, when tariffs were reinstated. So, it looks like trade policy can have a big effect on SPY. Now, let's switch over to the 1-hour chart for a closer look at recent price action. Looking at the 1-hour chart, we can see a clearer picture of some more near-term support and resistance lines. Notice the short-term bounce on May 12th, followed by the quick bull run the next day. That was probably influenced by Nvidia's strong earnings. It looks like the $590 mark acted as solid support on May 29th, but there has been some serious choppiness lately. It is unclear in the short term if the price will go up or down. Now let's move on to the 15-minute chart to look for some more short-term trading opportunities. The 15-minute chart reveals more of the intraday volatility. It looks like $588 has been a support line and $590 has been a resistance line for the last several trading days. That resistance will likely need to break soon if it's going to test the $593 levels from the daily chart. If it breaks below that, it could fall to the $586 level from the longer-term daily chart. Okay, so to recap, we're watching the $593 level on the daily chart as major resistance. A break above this could signal a longer-term bullish trend, but the probability of that happening seems low. If the price breaks below $586, we may see a retest of the April lows. $590 has been a short-term resistance, and $588 a short-term support. Keep an eye on further news regarding trade negotiations, as these events have a notable impact on market sentiment and the SPY's price action. That's all for today's analysis on Explain the Charts. Good luck trading!